the Fed sees inflation going up. The government spending $2 trillion. We have debt, $36 trillion. So just a giant amount of debt. And then they raise interest rates. It's a good thing for Bitcoin if the government just keeps spending money. It is what it is. I think that's part of the reason, like the underlying thesis of Bitcoin's value proposition is that it's a direct play on reckless government spending. I think that's another way, or currency debasement.
All right. Welcome back to another episode of Hosting Bitcoin. Today we've got the one and only Sam Callahan. Sam is a respected Bitcoin analyst, educator who's known for his deep insights into macroeconomics and Bitcoin's evolving role in our global financial system. He's also been an author on the News Block and a collaborator with some of our favorite thought leaders like Lynn Alden. Sam, you've brought some very critical clarity to Bitcoin's correlation with global liquidity and how that applies to investors, and have been a leading voice in the intersection of Bitcoin, market infrastructure, and how it applies to regulatory landscapes. So excited to talk today and really excited to have you on. I appreciate you for sharing your time with us and coming on the show, Sam.
Of course. Thanks for having me. I'm glad we're finally sitting down and doing this. We were together in person out in Big Sky, and we were having a good time, and we talked about doing this show. So a couple months later, I'm glad it's happening.
Since then, a lot has happened, both in the Bitcoin world and in your personal world. Catch me up on what life has been like for the last few months since I've seen you.
I mean, it's been busy. There's been a lot of milestones. 100K, getting married. Those are two giant ones. The latter is much more important, obviously, and I'm a very lucky man, and in many ways. But yeah, I mean, it's just been a wild ride, and in a lot of ways, I think it was expected. You know, I actually came across a couple interviews going into this year, and I kind of said 6 digits. I also proposed in the beginning of the year, so I'm glad that got settled as well. So it all kind of came full circle for me this year, and it feels good. So
that's awesome.
It's been very blessed.
It's been a great year. And similarly, got married this year as well with you. So a lot of victories all around.
Congrats. Yeah.
So going back to your early Bitcoin journey, for the benefit of people who haven't heard it before, what was it that first sparked your interest in Bitcoin and then ultimately got you to focus full time and start dedicating your career to the Bitcoin space?
Yeah, I mean, I usually go all the way back to college, but I mean, you asked me what sparked my interest, and it's pretty simple. It was Satoshi Nakamoto. When I came across Satoshi and the story of Satoshi, it read like a novel. And I was like, this can't be true. And I just kept reading, and I read the books. And around this time, there wasn't that many books. And I just learned that, wow, this guy holds this many coins that's worth this amount of money, and nobody knows who he is. That is like the ultimate mystery. It still is one of the ultimate mysteries of the world. And I think it will remain that way for the rest of time. And so that's what got me interested in Bitcoin. And then when I read more about it, I never was orange pilled necessarily by anybody in my life personally, but I now think about different touch points that came about. And I came across Bitcoin for the very first time when I think about it in this movie called Dope, which is a indie flick about this kid who is really smart. He grows up in the projects. I don't know if you've seen it, but he's trying to raise money to go to Harvard, and he's poor. And he comes across this bag of drugs, and he's like, I'm going to sell these drugs just one time. I'm not a bad person, but I'm going to sell these drugs so I can afford to go to college. And in that movie, this is probably 2015, 2016, he uses Bitcoin. They talk about Bitcoin. And that was my very, very first time even touching Bitcoin or hearing about it, but I didn't act on that. I just thought, that's weird. I thought Bitcoin, it was in a movie, so I thought it had gone away and it wasn't real. And I was like, oh, they're using Bitcoin to sell the drugs. And it was very Silk Road, era, and the narrative around Bitcoin at the time that's used by criminals. And that was my first touch point. But then when I came around it in 2017, I was like, well, this thing's very real. And there's this whole industry. And who's Satoshi Nakamoto? And then I just read the books. I read every single book I could get. And then I started to connect the dots because I had studied financial history and central banking the problem with fiat money long before I came across Bitcoin. And so when I realized that this was a form of sound money, a new form of digital gold, if you will, but even more so because it's a network and a piece of technology that's really revolutionary, I just knew that I wanted to really be a part of it. And it wasn't enough for me to just get individually wealthy off it. I wanted to help grow its adoption, help educate people about it. I saw a lot of misconceptions everywhere. And I wanted to help people understand that, wow, this thing actually can make the world a better place. And so I changed careers and then just kind of continued forward and just did what I could in my small way of helping people learn about it. And my whole goal was just to push Bitcoin adoption, whether that's a tiny amount. And that's what I continue to do today. So I really think that Bitcoin can make the world a better place, is making the world a place. And I see it every day in people who are adopting a Bitcoin standard and saving in Bitcoin, escaping the perils of currency debasement. And it's incredibly exciting, and as exciting as it was the first time I learned about Satoshi Nakamoto and the first time I saw it in that movie. So that's my beginner's journey.
I love that. You mentioned some of the misconceptions, which there are many, but what are some of the ones that you still encounter the most often, and how do you like to address them?
I mean, there's so many. The typical ones, and it kind of depends on the audience. So that's kind of the first step in successfully kind of addressing misconception, is understanding your audience and where they're coming from. But obviously, Bitcoin's bad for the environment is one that I think we'll continue to see in the future. You see Bitcoin's too volatile a lot. You see Bitcoin doesn't have intrinsic value a lot. You see, you don't really see Bitcoin is going to get banned by the government as much anymore. But now you see Bitcoin's going to adopt it. That's bad too. so it's just kind of flipped on its head. You see Bitcoin's used by criminals, but that's always been kind of laughable. And I think you're seeing less and less of these very flimsy ones. But yeah, those are the main ones that I can think of off the top of my head. Or Bitcoin's going to get replaced or replicated. That's another one. The MySpace argument. Yeah, that's just off the top of my head. The reason I can just list them is because they're not original at all, and it's the same FUD. Like, Bitcoin really deserves better critics at this point. That's what I feel.
I totally agree with you. What's your response to the intrinsic value one? Because I find that most people, when they cite that, I'm not even sure most people know what intrinsic value means when they say that.
Yeah, I don't think so either. And I think a part of it is I see that from a lot of what I would call like sophisticated investors or business school educated individuals, CFAs. And it's because of just the way they've been taught, honestly, how to value things. And they look at the discounted cash flow models and they're like, well, it has to be productive, right? And even gold only is, has value because it's used in processes and dental practices and electronics. There's kind of utility. And so it has some kind of value, intrinsic value. And what I would say is that, first off, going back to like Mises and human action, value is for the preference of the individual, comes from them. And when you look at Bitcoin, its intrinsic value is its underlying monetary properties, which allows it to be a good long-term way to store wealth. And similar to gold, gold's market cap is well above anything related to its utility. It's the monetary premium because people have adopted gold similarly for its underlying monetary properties. Gold doesn't have a yield. All right. And so you can't like value this thing like it's some kind of company, which is, I don't know why people have such a hard time with this. But Bitcoin similarly can be thought of as, its quote unquote intrinsic value is its monetary properties. So that goes down to like the scarcity, right? Scarcity, fungibility, like all these things you often hear about, portability, divisibility, you can go down the list, go back to like the 101s. But that really is what I would consider Bitcoin's intrinsic value. And then when you look around the world in terms of like individuals' preferences and the market today for stores of value and currency debasement that's prevalent everywhere, I would say that people are going to find a lot of value in those properties today. And so that's kind of how I kind of address that common FUD. And there's other ways to do it, but people seem to like wrap their heads around that a little bit more. I don't know. How do you do it? I'm curious.
Honestly, the way that I usually overcome any kind of objection is just breaking it down as simply as I can. And it usually means using some kind of analogy. So I know that you've got a biology background, a physics background, in addition to a broad-based research background and kind of more of the financial underpinnings of how the world works. So whenever I can relate it, how it's designed, how it works, to an existing system that people are more familiar with, whether it's, how Brandon Quittem likes to compare it to a mycelial network, or something that's a little easier to grasp than a piece of open source software, which most people have never directly touched in their lives, even if it runs most of their world. The closer that we can get to an analogy that they understand, and gold being the easiest analogy to compare it to, is usually how I'm able to get through to people who otherwise would not necessarily latch onto this. But have you found that to be true when you're explaining this, where having kind of a more diverse background, you can take a different approach with explaining it to someone?
Yeah, absolutely. I mean, we almost laugh because like there's so many different analogies in Bitcoin. Everyone comes up with a new analogy. I was talking to my friend. He's like, Bitcoin adoption is like a river. It only moves one way. And I'm like, yeah, that makes sense. But yeah, gold it's an easy one to make, right? And I think somebody who's further down the rabbit hole will be like, well, it's much more than digital gold. And they're totally right, to be fair. But it's a great starting point for people because they can really wrap their heads around, specifically around if we're talking about intrinsic value. They understand like gold, at least like where it's come from. It's been like in the world for a long time. Everyone who's lived has like dealt with gold. And so they kind of think like, oh, well, why does gold have value? And it's kind of easier for them to kind of wrap their heads around Bitcoin, this abstract thing out there having similar properties to that. It's just easier for them to wrap their heads around. So I agree completely.
The goal as an educator, right, is not to impress someone with how complicated you can make something, but make it more accessible to them. So even though we're probably fully down the, Bitcoin could be considered a life form rabbit hole to some degree, that's probably not going to be where most people meet you on the early stages of their journey. So you're trying to get as close to where they are as you can without scaring the crap out of them.
Yeah, and I again, it goes back to knowing your audience too. It's like if you walk into some investment committee for a pension fund and go in there and say Bitcoin's a life form, they're just going to be like, what the hell is this guy talking about? It's not really going to do well, for what you're trying to do, which is bring them on board, get them to adopt a Bitcoin allocation or buy some Bitcoin. And so like you got to know your audience. So that's the number one piece of advice I could give you. It's like I'm not going to say it the same way to somebody who is really not familiar with financial markets or investing to somebody who's a more sophisticated investor either. You can kind of guide them around, but you have to understand who you're talking to.
Speaking of that, you said a word before we got on the air. You said fiscal dominance, and I am woefully ignorant of what that word even means, but I know you're writing a paper about it. So tell me what that means and tell me what it has to do with Bitcoin, if you would.
Yeah, fiscal dominance. I mean, there's lots of different definitions for fiscal dominance, but it's basically like a phenomenon, if you will, with the way that the fiscal policy and monetary policy interact with one another. And so it goes back to this idea of central bank independence. So this is like central banks basically function and they have their mandates of price stability, so inflation, as well as full employment. And that's, they're focused on that. So they're not influenced by what's going on with the treasury with the amount of debt that they have, with the fiscal policies, with how much they're spending. They're not technically concerned with those things, right? They're worried about the interest rates and the level of inflation, CPI inflation, the economy, right? Now, the problem is when you get into a situation where the debt levels get so high and they become such a dominant force driving economic activity in terms of the government spending that it becomes such a force that the central bank has to take it into consideration when they make monetary policy decisions. And so you could think of fiscal dominance as like a good definition is, I have it right here, is it's an economic condition that occurs when a country's debt and deficit levels are sufficiently high that monetary policy ceases to be an effective tool for controlling inflation. In fact, persistently high interest rates in an environment of perpetually large deficits actually risk exacerbating inflation. And so you can also think of it as like fiscal dominance is when fiscal deficits start to matter more than other forms of money creation, like bank lending or interest rate policy in driving economic activity. And so this is important because typically it goes back to how money is created in the economy, which is through bank lending. So commercial banks make new loans. They credit the borrower's account with new money, and that goes into the economy, into an investment, building a business, whatever. So that's one way money is created, and that's from the private sector. And interest rates, the Fed, making it cheaper to borrow versus more expensive to borrow. It kind of, cools economic activity or spurs more economic activity. It stimulates it. When they cut interest rates, it stimulates economic activity. And when they raise interest rates, it tightens. So it tightens economic activity. Now, the other way is monetize government deficits. That's the other way you create money out of thin air. It's when the government is not bringing enough money through taxes and they have to cover the gap of their spending with more borrowing. And so that's what we're going through right now. And when the central bank comes in and actually monetizes those deficits, so they actually buy the debt from their own government, either directly or indirectly, well, that causes expansion of the money supply, and that causes like stimulation in the economic activity. And so in the past, if you look at like the 1970s, when there was a lot of loans being made in the economy, so inflation was going up, and you were like, what was causing that? Well, if you look at it, the fiscal deficits were kind of low, but there was a ton of banks making a ton of loans. And so you could kind of come to the conclusion that the 1970s inflation was primarily driven by bank lending. And so how did the Fed stop that? Well, Volcker jacked interest rates up to 20%. And that was kind of the right tool for what was driving inflation at that time, which was more bank lending. They raised interest rates. Banks, it's more expensive to borrow. Less people go to borrow money because it's really expensive. The bank lending drops, and then the inflation dropped with it. And so fiscal policy wasn't the one driving it. But you fast forward to today, it's structurally different, where the fiscal deficits are huge, okay? Then they're growing, and the bank lending is kind of like staying, not like insignificant, but not rising above the fiscal deficits. And yet you have the central bank using the same tool that they fought the 1970s inflation with today, when really it's not structurally the same. And so I'll stop there for like a question, but we can kind of keep going into it. But that's the gist of fiscal dominance.
Well, it plays into what I wanted to ask you about, because you and Lynn also worked on a piece that was about global liquidity and how that influences Bitcoin. So how do fiscal dominance and global liquidity kind of interplay with each other? Because I know those are two huge movers that, independent of Bitcoin, really have a huge impact on how it's perceived in the markets.
Yeah, so like what I mentioned before, it's like, so the Fed sees inflation going up, the government spending $2 trillion. We have debt, $36 trillion, so just a giant amount of debt. The Fed sees inflation going up, and then they raise interest rates. Now that increases the interest expense on the debt that the government has, which actually blows out the fiscal deficit even more, because they have a line item called interest expense. And that's just the amount of interest they have to pay, just like an individual with a credit card has to pay on their debt. And now instead of a 0% interest rate, now it's 5. And that added, now we have a $900 billion interest expense on the debt. And it's the second largest line item for the government behind Social Security. And so it's exploded. So what does that do? It leads to more widened fiscal deficits. We ran another 2 trillion fiscal deficits. So that leads to more like money printing, which leads to more sustained inflationary pressure. And then the Fed comes around and says, oh my God, we got to increase interest rates again. And then it's just like a feedback loop, right? And then it leads to higher interest expense, larger deficits, more inflationary pressure. The Fed makes the mistake again to raise interest rate more. And you just see how this is the cycle of fiscal dominance. Now, just think of like, so when I say interest expense, when the Fed raises money or the Treasury borrows money, they issue new debt. Now, there's people who buy that debt, households, financial institutions. And when they pay the interest expense, so it's 5% now, they pay that. Think of it as payments flowing from the Treasury to the bondholders in the private sector who own those Treasury bonds. Okay, so that's how it's a form of stimulus. It's almost liquidity because even, as they raise interest rates, the money, the interest that the bondholders receive gets injected into the economy. Okay, and this creates demand in the economy, even though the Fed's trying to stop demand by increasing interest rates. And so the interest payments going to those bondholders finds its way into the economy. So it's more liquidity entering the economy. And so this is how fiscal dominance could actually crowd out the private sector and become a more dominant force as interest rates rise. And this is why it only becomes a problem when the debt levels get this high. If debt wasn't at 36 trillion and it was really manageable at 6 trillion, it wouldn't really matter as much if interest rates went from 0 to 5%, but it matters a lot when debt levels are at 36 trillion. And so this is why, fiscal dominance, it's the fiscal policy is dominating and it is putting liquidity into the market at a time when the Fed is trying to cool the economy. They're just kind of using the wrong tool, and it's actually counterproductive, as I've mentioned, because it actually leads to even wider fiscal deficits. So they're using the wrong tool because I think they're using a tool that had worked in the past on an economy that's structurally different, and the inflationary pressures are driven by other factors than what happened in the 1970s.
So a meme that's been popularized that you already mentioned is the nothing stops this train. And we've had the 4-year cycle has seemed to be what we can count on in the past with Bitcoin. But do you think that we're at the tipping point where there is no more 4-year cycle? Are we at the point where liquidity, fiscal dominance, the just raw size of the debt is at a point where you're just going to see up only from here on? And if no, why not?
Well, okay. So like my paper that I did with Lynn or collaborated with Lynn looked at how Bitcoin's very closely tied to global liquidity. And as we're saying here is that like global liquidity is really influenced by government spending, right? As well as, central banks doing really accommodative things like quantitative easing. But the government spending, the fiscal policy is a real driver of liquidity conditions. And Bitcoin's price is really tied to liquidity conditions. So you can see how they're kind of related. And so it gets down to this factor of like, I'll get back to the 4-year cycle with Bitcoin, but nothing stops this train in terms of them increasing the fiscal deficits. Because even if you look at the CBO's own projections for the next 10 years, the debt and the deficits are just going straight up. And that's the CBO's own projections. And the reason being is because the fiscal deficits are kind of structural in nature, meaning that they're kind of baked in the cake with these entitlement programs, Social Security, Medicare, Medicaid, and different healthcare spending and like veterans benefits and things like that. They're mandatory. They're encoded in law, and the government has to keep spending on them. And the entitlements just keep growing as the population ages. And so now the Social Security, health, and the interest expense alone made up 87% of the spending growth. So when it comes down to like whether they can actually cut the spending, well, they can only cut without any kind of congressional approval or like new pieces of legislation. They can only change like 30% of the the spending, which is discretionary. And then you go into that, and part of the discretionary is defense spending, which is by far the largest amount of discretionary. And you just look at the world today and how geopolitical tensions are rising, and you look at the defense budget for the next 10 years, and they're planning on increasing defense spending, not cutting it. And so that takes out another, like, I don't know, I think it's like 10 to 15% of the discretionary spending chunk. So then you're left with like 15% of the entire budget to try to cut to make any kind of meaningful dent without any congressional changes, which, I mean, just look at the political gridlock we have today and the polarization. The only thing that they can agree on is to not cut spending, right? So like, I don't see that happening in terms of changing Social Security or Medicare. And even Trump, the Republicans used to be all about that, but Trump, I think he still has on his social media page, you know, the Republicans shouldn't touch a penny of Medicare and Social Security. That's their new kind of position. And so you don't really see any kind of political momentum behind changing this from either party. And so all that's to say is that nothing stops this train of large fiscal deficits because they're structural in nature. They're a factor of previous laws as well as demographics that have just led to them increasing over time. And as I mentioned with Bitcoin, you know, it's a good thing for Bitcoin if the government just keeps spending money. It is what it is. I think that's part of the reason, like the underlying thesis of Bitcoin's value proposition is that it's a direct play on reckless government spending. I think that's another way, or currency debasement. And so in terms of the 4-year cycle, I look out and like nothing stops this train. And so, yes, I do believe that cycles will still exist in Bitcoin's price. But as long as these structural fiscal deficits are in place, and the governments will have to keep spending, then Bitcoin's price will continue to react because they're only going to widen, and that's from their own projections, the CBO's own projections. But you know, in terms of the 4-year cycle, I think the cycles are going to get longer, and I think that's related to the changing investor base, being more institutional investors now. It feels like we really are in this like Goldilocks scenario right now of the fundamental setup for Bitcoin in terms of the regulatory clarity we're getting. Combine that with the macro picture, combine that with the accessibility of getting exposure to Bitcoin through all these different investment vehicles, in terms of just global acceptance and education levels. You know, all those things combined are coming together to create a really interesting combination for this cycle that I think is a reason why I believe it's going to be perhaps a longer cycle. Now, people love leverage. There will be human behavior is unchanged, and people will get over their skis and they'll rush the top, and there'll be some kind of blow off top, and there'll be some kind of quote unquote crash. And so I don't believe the cycles are over. I don't believe in the super cycle theory, but I do think this cycle could be really interesting and longer, as well as, you know, this idea of diminishing returns. I understand it because the bigger Bitcoin gets, you know, the likelihood is that there's not going to be as big gains. But at the same time, I think often about the way that new technologies are adopted and the S-curve adoption. And, you know, I think we're here. Like, I don't think we've seen this part. And that's just how new technologies. So like, yes, I believe in the larger Bitcoin gets, likely returns will diminish over time. But I don't know if this cycle necessarily has to be diminishing returns from the last cycles. I think we're still here, and there's a lot of adoption that still needs to take place, and thus a lot of opportunity from an investment standpoint.
I tend to agree with you. And even at a couple trillion, it's still a rounding error in terms of global assets. And that's, I think, conceptually hard for people to accept that at 100K, Bitcoin can still be extremely cheap in the long arc of time, but it just needs proper context. And I think you did a great job unpacking how liquidity and how just fiscal conditions impact Bitcoin. We've seen Saylor talk about recently in some of his presentations about how Bitcoin could actually impact the deficit if we get something like the triple maxi strategic Bitcoin reserve that he talked about. What do you think about that? Do you think that Bitcoin could, in any reasonable amount of time, have an impact on the national deficit as it stands?
I mean, yeah, if they look, the way that the Cynthia Lummis's Bitcoin Act is written is that the Bitcoin has to be held for 20 years and then it can only be sold to pay down the debt. It's the only stipulation is like you can only sell this ever to pay down the debt. And so if they do something like that, then certainly I see it as a way to actually be a solution to the debt problem. Now, how they fund it is interesting. Would they just take out more debt to just buy more Bitcoin? I mean, that's probably the easiest way. And if they spend money on a lot more stupid stuff than that, so but there's other ways that they've brought up in terms of how to pay for it, like revaluing the gold certificates as well as the Federal Reserve paying a part of its remittances to pay for the Bitcoin. And is that possible? Sure. But and like long term, because Bitcoin's price appreciation, I mean, as we know, one appreciates and then the debt is denominated in a currency that they continue to debase. And so you got one losing value and one gaining value. And so, yes, I do think that if they adopt a significant Bitcoin treasury reserve and then 20, 30 years from now, even Saylor's model that he frequently cites, it's called the Bitcoin 24 model, and you can run it yourself. It's open source. But he has certain assumptions in place there, and he gets, his projections are in 21 years. His bull case is 49 million, his base case is 13 million, and his bear case is 3 million. But he came out with that in August and with a starting price in 2024 of 65,000. But if you keep those assumptions and you bring it to 100,000 or 105, the bull case goes to 79 million. The base case goes to 21 million and the bear case goes to 5 million. And so you see how like significant these things can change as Bitcoin adoption grows. And that's with those assumptions that he just picked. But if you can do more conservative ones, but even so, it's kind of hard to fathom the growth that Bitcoin could have over a long time period, like 21 years, and what that would do to the debt situation if the United States adopted it as a reserve asset. And those assumptions are interesting because basically he takes into account the law of diminishing returns. He says like, hey, it's going to compound at X percentage, and then every year it's going to lose 2.5% of that annual recurring rate, or say compounded annual growth rate. And so he kind of assumes that it'll kind of decrease over time. And so you could even plug in more conservative metrics and say it starts at like a 25% CAGR, which over the last 4 years, it was around 60. But you can say 25 to be conservative and say it's going to decrease over time. And still in 21 years, I mean, it's pretty impressive what it gets to, which I mean, if the United States bought 1 million Bitcoin and then it gets to, I don't know, 5 million in 21 years. Yeah, that could make a meaningful dent in things. And it's a solution. I don't really hear any other solutions out there that are actually, actionable. So I support it. What about you? What do you think?
No, I love that answer. And I don't have a better idea. I mean, you're probably the same as me. There's a reason we give all of our time, energy, and spare money to this space is because it's a solution to so many things. And not just on the national scale, but at the individual scale and the transnational scale. I mean, one of the things that was really interesting to me when we were first getting to know each other was how deep you had done a dive into these kind of transnational, supranational organizations like the Bank of International Settlements and the International Monetary Fund. And I would love, there's an impact on the US by adopting Bitcoin, but what are some of the broader global impacts that we might see with this becoming more common technology that not just individuals, but these national entities can actually use on their balance sheet and in other ways?
Well, the Bank of International Settlements is interesting because I can't think of an organization that would be more threatened by a neutral monetary network that requires no third party to send value to.
And just to like
There,
level set, some people don't even know what these things are. So what is the Bank of International Settlements?
oh man, the Bank of International Settlements is what they call like an international financial institution. So they're like a global institution that is set up by international treaty, which makes them above the law of any single nation. And they kind of act like diplomats. And it was set up because of the way like the Bretton Woods system was set up back in 1944, where originally, they needed like an institution that was so-called neutral and apolitical to kind of manage the exchange rates between the currencies that were all pegged to the gold, which was all, or the dollar, which was all pegged to the gold. And so they would just kind of like work with the balance of payments, make sure everything's working well, kind of do cross-border payments, large cross-border payments between central banks. It was like a central bank. So they would just like do like really large entries and accounting for these firms so that when countries are trying to pay other countries, like they're in between, they're kind of just moving the funds around. And in the process, they became like also a hoarder of all the data. And so in order to maintain financial stability, they required all the central banks to give them all their data. And then they became like the data house for all the global financial system. So that's why they put out some of the most encompassing research out there, because they get all the data and then they spit out the data for the global economy. And the Bank of International Settlements is just one of those things that's in the background, but actually holds a lot of power because they kind of control the rails that send money around the traditional financial system and help oversight and insight into what's actually going down in terms of the global economy at any given moment. And, for them, again, like Bitcoin, they make a profit off of all these transactions they make, and they're not really needed at all when you have a global settlement network that functions, peer to peer and decentralized. So I could see why they talk against it a lot, because it really threatens their existence in a way over a long enough time period. I don't mean to be incendiary, but it's just the truth. They're literally the Bank of International Settlements, and Bitcoin is a global neutral settlement layer or settlement network, right? So, the Bank of International Settlements, like how Bitcoin changes things, is they've been trying. The thing about it is like they've been doing a bad job. Like since the 1980s, they've been trying to come up with cheaper ways for people to send money globally and cross borders. And it's just been slow, expensive, and despite all the technological progress, they haven't given the world anything. Just try sending them money anywhere across borders. It's ridiculous. It's so archaic, and it's really expensive, and it's really hard for people who are trying to send money back home and they're working abroad. And it doesn't have to be that way. And the only reason it is that way is because of all these walled gardens and regulations that have been put into place to kind of keep their monopoly on this thing. And so Bitcoin just is a classic example of technological disruption that's coming for the banking industry because it's a better solution. It's like the private market came up with a better solution that actually, provides cheaper and faster cross-border payments without any kind of fee-seeking intermediaries. And so that's a big deal. And unfortunately, not unfortunately, but unfortunately for them, it just removes the need for them entirely over long enough time frame.
And is there a sense of how lucrative that business is for them? Like, do we know what kind of income stream they get from managing those remittances and cross-border payments?
It's been it's been years since I've looked into it. It's pretty substantial. It goes into like 3 funds. I think one of the things, like the member banks of the Bank of International Settlements are central banks themselves. And so part of the profits, if you will, flows back into basically the treasuries of the member banks, which are the central banks of all the governments. And the way it works is interesting because it's like getting admitted to the club, right? If you're a large enough country with like a stable enough banking system and economy, then you added as a member bank for the Bank of International Settlements. And depending on how much you contribute to like the transaction flow and things like that, so the larger economies get a larger share of the profits. And so in a way, it just like it excludes smaller nations who aren't member banks of Bank of International Settlements, and just leads to, because they still have to use the infrastructure that they rent seek off of, but they're not member banks, so they don't get to share in the profits because they're too small. And all the biggest share of the profits go to the largest countries. So you can see it's like this huge cycle of inequality in a way. And so, in terms of the money, it also goes not just to that, but there's two funds that are really opaque. And part of it's just to like make investments. Like they're just like any other bank. Like they make investments. They hold like a decent chunk of gold that they got through really nefarious means, I would say, during World War II, which is an interesting story in itself. But they make investments. They, have these funds that they're not in dollars. They're in something called special drawing rights, which is like another international basket of currencies. It's like a international currency that's a basket of other currencies. So you can see how this gets a little confusing, but they have profits. It's been a while, but I think in the hundreds of billions, and they go to like these funds, and how they use the funds. Part of them go to the member banks, but then two of them go to the funds managed by the biz, and how they use those funds. They just give very vague explanations for how they use them. But they have a really swanky place in Basel, Switzerland. Or Basel, Switzerland.
That's probably where most of the funds went.
Well, part of it. I hear they got a great like Michelin star restaurant in there.
With Bitcoin existing, I mean, is there any way that they can fight back against a system like Bitcoin, or is it just over time it completely obviates the need for them, and there's no real way for these kinds of organizations to resist it?
Well, they can try to compete with it, which is what they've been trying to do by building a global central bank digital currency network where they're in control. They're the operator of the network, or the network administrator, where the Bank of International Settlements is there at the top. And then, it's basically like a centralized blockchain where each central bank is like a node in the blockchain, but then there's somebody at the top who can actually reverse transactions and things like that. So then the problem I have with the Bank of International Settlements is that they're unelected bureaucrats, infringing on the sovereignty of countries because they act above the law, and they also control, public infrastructure that's extremely important as well as profit off it. And so they want to put themselves in the middle of a global central bank digital currency network to try to compete with these new private sector technologies like Bitcoin, like stable coins, privately issued stable coins. And the problem is like they can try, but what it leads to is even more and more centralization. So more centralization because they need more speed, they want more control. And so it leads to even more centralization where the biz is increasingly more powerful at the top of the pyramid. Because they control the on and off switch of the network and who can access it, all the data that comes through something like a digital currency system, they would just be extremely powerful. And they're trying to get that efficiency of payments, that settlement speed. But they're sacrificing things like privacy, things like security, because they're now a single point of failure, right? And so what would happen if you have this huge centralized global central bank system that gets hacked? I mean, it would be the cybersecurity risk is incredible. And so you contrast that with something like Bitcoin, which is like very, very different, right? It's a decentralized, highly secure network that nobody controls, where nobody can manipulate the rules, where you don't have to trust anybody or organization like the Bank of International Settlements to achieve final settlement. They can try to compete with that, but it's very, very tough, I would say, to compete with that. And they have to engineer not only will they have to engineer the entire system that's secure, but then they have to figure out interoperability, how every single central bank can speak to one another together. And that's the really another beautiful thing about Bitcoin is it's all one protocol and everyone could join. It's permissionless. So like when you have a permission blockchain from the biz and then you have to have each central bank running a node and it all has to connect on the one, single protocol, that's been the big problem with them trying to improve cross-border payments is how fractured the system is and how siloed everything is. And that's why it's so costly. And I don't see like why they wouldn't run into the same problems with a CBDC, multi-CBDC system. And they say it themselves in the research. They're just like, how do we fix the interoperability? It's going to take global coordination is what they say. I'm like, yeah, good luck. I mean, what Bitcoin does beautifully is it globally coordinates, a ton of people at once. That's why it's so incredible. You can kind of gather around Bitcoin because of the protocol rules. It's transparency and everyone can see it. And so it allowed people a distributed network to agree on some form of truth and join the protocol and all be interoperable with one another. And that's something that's like extremely difficult to do from the top down, in my opinion.
Totally agree. And it's so obvious why one is better for humanity than the other. But if we're expecting and we're hoping for Bitcoin to be this sort of backbone of how the world's financial system operates, what do you think the most important cultural or philosophical shifts need to be to make sure that we stay on the happy timeline where we use a decentralized network that we all freely participate in rather than this CBDC of CBDCs that rules the world? How do people need to change their mindsets around this?
Well, I think the two are going to exist. I don't see the central banks and the international financial institutions giving up the power without a fight. I think that's just like natural human behavior to try to protect their territory and compete. And so I think there'll be a time when there's going to be a choice, and there's going to be a ton of people who use CBDCs. They won't care about the privacy implications or the security implications, but there will be people, realizing that Bitcoin is a way to actually store your wealth because Bitcoin's resistant against censorship and manipulation, and the purchasing power actually increases. Whereas you just have a shiny piece of fiat in a CBDC wrapper, well, your purchasing power is still going to go down. And so over long periods of time, the people that are on a Bitcoin standard will thrive and life will be feeling more cheaper for them. Whereas the people holding CBDCs will look around and be like, man, I feel like I'm on a treadmill that just keeps getting faster and faster. And they're spying on me while I'm on the treadmill. This sucks. And so eventually like Bitcoin will win out just on its merits, I think. And, I think the ability to self-custody, I mean, that's really important. I think building out tools and ensuring that the protocol continues to function where there will only be 21 million and that people have the ability to self-custody. And then there's going to be really unique solutions built on layers on top of Bitcoin. And that's for people smarter than me to figure out those tough problems. But I do think we're really early in terms of what Bitcoin is and the protocol. And like, I don't think like, in some ways, Bitcoin will look the same in 20 years, but in other ways, it's going to look different. Mm-hmm. The core won't change, but it's going to be a ton of things built around that foundation and that core that I don't think I can even imagine today. So I don't know if I answered your question, but the right to self-custody, 21 million, those things have to be cherished and preserved.
One of the really unique things that I don't think we've ever seen before in any other technology is that with Bitcoin, you get to write a message and that message lives unaltered, unchanged, forever, for everybody to see, what would your message to a Bitcoiner 50 years from now be? What would you want to say to someone in the future about what it looked like today?
Hodl. I mean, it's the same as true. I mean, that like 50 years from now, it'll still be true that you're going to want to hold on to that Bitcoin because it's a beautiful thing when the Bitcoin actually increases purchasing power and you save in that money. I mean, I can't think of better advice. Yeah, maybe hodl. I don't know if I have another advice. 50 years from now, it's going to be kind of crazy. I say like, I think you're going to be like grandparents talking about like back in my day, like Bitcoin wasn't taken seriously, whatever. I have a tweet from 3 years ago. And it was like, I said last Christmas or Christmas at that time, I gave my 10-year-old nephew like $100 worth of Bitcoin. I said, you can't spend this till you're 18. And I was like, I just became my grandpa dishing out savings bonds in 1998. And fast forward to now, and it's like, see, kiddo, that $100 is $200 now. Like, isn't saving fun? And he's just like rolling his eyes. He's like, man, I just want like a drone, I just want to like go outside and play basketball, man. But yeah, sure, I appreciate your Bitcoin. So like, it's like the same thing, right? It's like, grandpa, that savings bond, you're gonna hold on to that. But he'll know, he's gonna hold on to it, and then 10 years from now, 20 years from now, I think it'll be worth something for him. And he'll be grateful that his crazy uncle gave him $100 worth of Bitcoin.
And some of the best wisdom we get from people is often extremely simple. So what 4 letters will be more impactful to someone than HODL?
What would you put?
I would probably say hardly anybody knew in my day what this would look like in yours. And hardly anybody in your day knows what it will look like 50 years into the future. But you should try to imagine it anyway.
Yeah, that's better. That's good.
Sam, I know you...
And HODL.
And HODL. Signed HODL. I know you got to run do some errands, but I want to get any final thoughts you got for the audience. People listening are investors, entrepreneurs, people who are looking at mining and just Bitcoin in general. What final thoughts would you share to people as advice, wisdom, or just things to look out for and that you're interested in?
I would just say like figure out ways to kind of like tie yourself to Bitcoin in different ways. There's lots of different ways to do that. But one of the best things that I've come across is just the people and just the character of the people and how you go to like a meetup and it's like a form of community, but also like the conversations are very deep and real. And so it's very stimulating. And so like you can either just, join a community, but also, I mean, if you want to build a business around Bitcoin, if you want to just invest in Bitcoin, if you have a company, you can adopt a Bitcoin treasury strategy. There's all different ways to like incorporate this new technology so that it betters your life. And I've lived it myself, and I would just recommend that people embrace Bitcoin in totally different ways in their lives, and they're going to benefit from it. And so think through that. There's more than just like buying and holding, although that's a good place to start.
Sam, I really appreciate you sharing your time with me, with the audience. I appreciate you coming on. Can't wait to spend another few days in Montana with you next year. I'm glad that Montana wins instead of the other alternative, but really grateful for the insight, and it's a treat for people to get to talk to and hear from someone who's been through so many years of this, not just in terms of your own personal study, but someone who's gotten a chance to really teach the impact of this technology for years and years. So I appreciate having you as a friend, and thank you for coming on. And before we go, where can people who are listening keep up with what you're working on, find you personally on social, any projects that you want them to pay attention to and look out for that you're working on right now?
Yeah, thanks for having me, and happy holidays to everyone listening and to yourself. I think it's going to be a great 2025. And you can find me on X. I mean, I post there at Sam Calla, SamCallah. And then I'm also the author of the news block, .substack.com. So my wife and I, Natalie, who I'm sure some of your listeners know, we kind of work on that together every week. It's like a market update where we curate things and share our thoughts on some of the major news stories. She reads it. She's amazing at that. And I write it. And yeah, you can follow that and subscribe to it. And I think it's some alpha that'll go right into your news, your inbox every week. So newsblock at substack.com.
Love it. Thank you, Sam. Appreciate you and look forward to the next time we get to do this, man.
Of course. You have a great day.
You too.